Someone in the chat wanted me to take a look at Tempus AI. This AI healthcare rocket ship is up 175% over the past year. Let's unvault a 1-minute discounted cash flow analysis of Tempus AI, ticker symbol TEM. Tempus is a healthcare technology company using AI plus genomic data to personalize medical treatment. It runs genetic testing labs, cancer, hereditary disease, and it sells its data and AI services to pharma and hospitals. Recent performance has been strong. Q2 revenue of $314 million, up 89.6% year over year. Gross margin of 62%, which is awesome, up from 45%. And they're on track for $1.26 billion in revenue in 2025. They're projected to hit positive EBITDA for the first time. Their net income has a drag of a heavy stock-based compensation. And they raised $750 million in convertible debt offering at 0.75% interest that was oversubscribed. Tempus's data network spans 4,500 healthcare systems and over 40 million patient records, fueling its AI model for oncology and other diseases. Tempus is trying to become the AI operating system of medicine. Its biggest moat is its massive data advantage, unique data sets that no one else has. The AI models improve as more tests are run. It has integrated systems with diagnostics, data, and clinical tools. Strong partnerships with over 1 billion multi-year data contracts, and they're showing real operating leverage with high margins. The risks are insurance reimbursements can shift, testing payouts might drop, there's heavy competition from companies like Guardant and Roche. I'm not overly worried about it, but there's regulatory pressure on AI data privacy. And as I mentioned before, their non-GAAP profitability hides dilution from stock-based pay. And this is one of those founder-controlled companies, take it or leave it. It's my DCF modeling. I have revenue growth slows from 80% in 2025 to 10% by 2033. Margins rise toward 20% as scale improves. I put a terminal growth rate of 3%, that might be a little generous, and a discount rate of 10%. You end up with a base case of about $15 billion market cap, $85, $95 per share, roughly today's price. But there's some key moving parts here. Revenue growth trajectory. Does growth stay above 40% for the next few years? Sustainable margins. Can margins expand to 20 to 25%, or do costs eat gains? Capital needs. Future CapEx or new debt could dilute return. Reimbursement trends. Any insurance pushback can hit revenue. New product successes, AI imaging and liquid biopsy expansion. And as I said, this is a highly competitive space. There's a lot of new tech, and rivals could erode moat. But let's look at the bull case. If Tempus sustains over 60% growth, margin hits 20 to 25%, and new AI tools like Tempus Pixel, XM, liquid biopsy succeed, the stock could run into the 150 to 200 plus range. But as I said, I think the base case is growth moderates to 40-50% and margins rise steadily to 18 to 20%. And that means there's no margin of safety at today's valuation. Tempus is a great business with improving fundamentals, but it's not a great value. Price is what you pay, value is what you get. I'd put this on your watch list, and if it pulls back a lot, it might be a good buy. This is not financial advice. Let me know in the comments what stock you want me to do next.